episode. Today, we are fortunate to have George joining us here from Dallas, Texas. George, welcome to the show.
Thank you. Thank you for having me.
All right. Well, I've seen you a lot on social media. You're very active and not just active in social media, but you are killing it. You're getting so many deals done. You had one that you closed, I believe it was last October, 1,275 units, which is amazing. So why don't we just go ahead and tell our listeners a little bit about your background and how you got to where you are right now?
Sure. So I grew up in South Florida, in Miami, and during college, I studied to be an electrical engineer, but I soon realized I didn't really want to be an engineer, didn't want to be sitting in a cubicle and doing that kind of stuff. So I started digging into real estate. They say success leaves trails. Well, I kept seeing real estate investing in all these highly successful individuals. So I started reading up and went and got some coaching on how to do real estate investing. And I lasted maybe a year and a half as an engineer when I graduated, and then closed a couple real estate deals and quit my W-2, started doing real estate full time. That was about 14 years ago now, and had some really good success with single family in the beginning, then started doing some smaller multifamily, held some single family properties, but mainly we kind of focused on wholesaling and also fix and flips. We did quite a bit of fix and flips. We're probably averaging around 40 to 45 a year. With scaling that, to me, it just made sense to start a construction company as well, because we had some issues in the past with contractors. I had worked for my uncle's construction company for a while, and even my W-2 job. So I was electrical engineering degree, but I went to work for UPS in their engineering department. And that was more of a general contractor, really. We worked on expanding the warehouses, renovating them, etc. So with that, I went ahead and I started a construction company. That was probably about 11 or 12 years ago. And that really went hand in hand with the real estate. And then it must have been we're going on 3 years now, that I really started focusing on large multifamily syndications. Since then, I stopped doing the single family altogether and just focused 100% my construction company as well as my real estate investment company on multifamily. And since then, we're currently working on our 6th syndication, and should be at a little bit over 2,500 doors when we close this one. We've pushed it back a bit because of coronavirus, but yeah.
You guys in your team, you guys are like coming in like a tsunami, I swear, into this market. I've been following you. It's been probably like a good year. And every time I turn, it's like, okay, Jorge's got something else in the works. He got something else in the works. So, it's just really exciting to see just the level of success that you've achieved. So when 3 years ago, when you started looking into multifamily syndications, right? What was it about the actual syndication business model that attracted you, and how did you make that transition?
Yeah, no, that's a great question. I didn't really cover that, but so I said 3 years ago, right? So I feel like what happened is I literally woke up one day and I opened my eyes and I started thinking back, and I'm like, okay, so what have I actually built? I've done a lot of transactional single family real estate. I've built a construction company, but the true wealth wasn't there. And that's what kind of got me going and looking more into cash flow and looking into building a legacy. And then I actually stumbled upon syndications and large multifamily apartments because we were doing a renovation for a multifamily, and started speaking to the owner, and he was a syndicator, and he started telling me how he had purchased the apartment, and to me that blew my mind. I didn't think that was possible. I thought to buy these multifamily apartments you've got to have millions and millions of dollars to come in and buy it. Never thought about bringing in investor partners and kind of making it a team effort. And then once I realized you can do that, I just went all in. Got all the knowledge I could, underwrote so many deals to learn, like I'm sure, a lot of us have. And at some point, I decided, okay, am I going to do this on my own? There's a lot of successful operators out there that are individuals, or am I going to do this with a team? And, I decided that I wanted to scale. I wanted to go big, and to do that, it was going to be tough on my own. So went in with a team, and we've, you say it looks like we're always working on something. It took a good amount of time in the background where we were working pretty hard, and then everything started coming to the surface. And then we try to always keep something in our pipeline, not to get, we don't want to spread ourselves too thin. So we have the team and we leverage that, but then we always have something in the background working so that we're not just left with nothing.
So what would you say is, because I see that you've scaled really quickly, so what would you say would be like one of the critical variables that has allowed you to do that?
I always say this, and I'm trying to think of something different so I don't say the same thing on another podcast, but focus. It's the second. So I tried doing this. I tried doing the multifamily with the single family, with the construction company, and it was tough. I got a couple deals done, was able to do it, but the second I decided that I was going to put all my focus towards multifamily and then set my construction company up to where I'm not so much on the day-to-day, more of just overseeing it, that's when things really started to take off. Okay,
so focusing and just kind of having one aspect. So when you're going in on these deals with other GPs, right? I take it. Okay. So what aspect do you typically find yourself filling? What role?
Yeah. So in the beginning, right, we had never raised equity in this fashion. We had some private lenders for the single family deals, but we hadn't raised millions of dollars. So that was the one aspect that we definitely needed help on in the beginning, as well as the net worth and liquidity. We had some, but not what we needed to close on these large multifamily deals. So other than that, we were the ones locating the deals, boots on the ground. My construction company would manage the CapEx, asset management. So, we're very involved. The only pieces we were kind of missing was net worth, liquidity, and then raising the capital. As we've grown, things have kind of changed on that aspect. We feel pretty comfortable raising equity now. Now we're just trying to take down bigger properties, and that's why we're bringing in other co-GPs to help with that.
All right. And so a lot of the deals that you're finding right now, kind of what point of the spectrum would you say that they lie? Are they kind of like heavy lifts, light value add, or where would you put them on the spectrum?
Yeah, no, we've always looked for true value add deals, your C, B minus type of properties that have a clear value add. For the past 2 years, I felt that some of these operators were overpaying for properties, kind of just squeezing everything out of it. And to me, that just didn't feel right. Some of the costs per unit were kind of getting close to what you can build some of these for. So to me, it just wasn't making sense. So we've always gone after the true value add deals that, and not necessarily heavy lifts. Some of them have been somewhat heavy, but just the ones that clearly are under rent, under average rent, just poor management, etc.
So when you mention these true value add, and you mentioned kind of poor management, under average rent, is there usually like a typical like rent bump or something that you're looking for that to meet that true value add criteria?
Not necessarily, more the value we can add to it. If we're coming in at $30K a door, but I've got sale comps at $60K a door all day, and I'm only putting an extra $10K a door. Simple math. To me that makes sense. We're not scared of that $10K a door or whatever it's going to be to get there. We know we can get it done. So that's really what we look at. If that's going to take a $50 rent bump, or if that's going to take a $150 rent bump. Obviously, the higher the rent bump, we definitely dig in deeper. We want to make sure that's doable.
Okay. So what would you say, like throughout this, over the past 3 years, what would you consider to be kind of like one of the biggest challenges that you've been faced with?
Same challenge I faced when I was growing my construction company is when you get to a certain point and you want to scale and you want to keep getting bigger, you have to build a team, and you've got to rely on that team to get certain tasks done, and that can be difficult at times. So, a lot of systems, a lot of procedures that need to go in place, and finding the right team.
So what do you think is one thing, like, let's say that has helped you to find deals, one thing that you think that you've done very well that's helped you to find deals? Because you guys just seem to have so much coming through the pipeline.
Yeah, I mean, we in the beginning, I definitely want to say it was we took the same attitude as we did towards single family, towards multifamily, which I feel like a lot of other operators don't. They kind of just go straight to the brokers. And we were doing scrubbing CoStar, calling owners, and we found our first 2 deals that way. And then we're pretty, I don't want to say aggressive, but we follow up. We use our CRM. We follow up with everybody. Even if you're telling me, we lost a deal, okay, well, I'm going to follow up in a week to make sure it's actually under contract. Then I'm going to follow up within 30 days to see if it fell out during due diligence, etc. And that's all in our CRM. And then it reminds us to follow up with that owner, that broker, and whatnot. And then that's it. I could also say that we have a certain criteria, and we stick to that criteria. So we don't, there's been a ton of deal flow, right? A lot of people trying to sell their properties, being at where we were in the cycle. So you can get easily distracted. You can why fully underwrite a deal that at the end of the day, there's no way it's going to make sense. If you just take a step back and look at the numbers in the beginning, on the high level, it's not going to make sense. So that's another thing we do pretty well.
So, given with this sudden black swan event, let's talk about that we have everybody, it's like the talk of the town, right? So 1,000
webinars.
Yeah, exactly. So how do you think, or what do you see happening right now in the multifamily space, and what are you doing to kind of protect yourself, your business, your assets, against the downside right now?
Yeah, so as far as our current assets, I mean, we've taken a ton of steps, a lot of the same stuff you've heard from the other operators, but we've wanted to get ahead of this. We've reached out to all of our tenants, residents, and we want to know if they're going to have issues. If they are, we're making sure to lead them in the right direction of where to get help, whether it's through the government or, there are still some employers hiring, so we lead them in that direction. We've done certain things with waiving our late fees, doing payment plans, taking April's month and spreading it throughout the rest of their lease term. We are adjusting, we're open to it, and then clear communication with everybody involved, not just the residents, with our investors, with our lenders, with our vendors. There's certain vendors that we reached out to, and they've been gracious enough to hold back our payments. Right now we want to have as much reserves as possible. We don't know, nobody knows how long this is going to go for, and how bad we're going to get affected by it.
Do you foresee this impacting your value add timeline, like for like the renovations? Do you see that would be an issue for operators in the industry right now?
Yeah, I mean, I know a ton of operators that have completely shut down their CapEx. So yeah, definitely. Us in the projects that we had going on, which was in Oklahoma and Houston, construction was exempt from the stay at home. I don't know if they're going to change that. I think they ended up changing it in New York finally. But as of right now, they have not changed that. We are not going as fast as we would be because we're taking extra precautions. We're only doing the work that we know is not going to expose others to, where we can keep our distance. And so, yeah, I mean, it's definitely going to slow things down.
And do you think, because of this event, how do you think that's just going to impact just overall deal flow? Because I mean, up until this period, like you said, people were paying these exorbitant valuations for properties. I wonder whether or not we're actually going to learn anything, mainly the hedge funds, right? Whether or not they're going to learn anything from this experience.
Yeah, I like how you phrase that. I think there's going to be a lot of lessons learned. Unfortunately, there is. But there's also going to be opportunity that comes out of that as well. But yeah, I mean, like so let's say you overpaid for a property, right? And now we go into this a few months, I don't know, 3 months, 4 months, whatnot, of not collecting the rent you thought you were going to be collecting. You start hurting, and people talk about over leveraging. Well, overpaying is an issue too, because if you need to get out of that property, you're not going to be able to. Nobody's going to pay you what you thought they were going to pay you now. So really your only option is to work something out with the lender, which, for the most part, I think they're going to, depending on how bad it is. But if not, then, I mean, you're kind of stuck with it, and you could end up losing your property.
Do you think that there is potentially anything else that maybe could be done from the legislative standpoint at this point? We have these bailout packages and everything, but do you think it's enough to try and to alleviate a bit of the pressure?
I'm not sure if it's enough. I mean, I think they are trying. My question is how difficult it's going to be to get some of these. That's kind of my concern. I think they're saying the funds they're going to be sending is going to be in 3 weeks or so. So I mean, if that happens, that's pretty quick. I'd be not surprised, but I mean, I think that would be pretty good stuff if they got it that quick. And then as far as getting the grants and the loans that they're talking about, that's what I'm really curious about, how easy it's going to be to attain that. As far as if they can be doing more, I think we kind of have to see how this plays out.
Yeah, probably, definitely. It's a little bit early, especially given we're, I think, on the second, going into the third week here soon.
Feels like eternity, but yeah, I think you're right.
It really does. So what would you say, how would you describe like your biggest or most proud achievement so far?
It's a good one. I take it in the multifamily world.
Yeah.
I'd have to go back to those 1,275 unit portfolio we closed. It was almost a $100 million deal. To me, that was a pretty good moment. Roller coaster of a ride getting there. So a lot of things we had to overcome, a lot of obstacles. So yeah, it felt really good getting that to the finish line.
Was there any point while you were working on that deal that you felt like it was getting ready to slip through your fingers?
I mean, doesn't every deal? I'm kidding. Yeah, I mean, there was a couple times, just making sure everything came into place. And I mean, there was even I think a week before we closed, there was one that got thrown in there, and for an hour or two, I was like, oh my God.
But you got it done.
We got through it. Yeah.
Yeah. So, I mean, could you give our audience, our listeners, just a little bit of like a blurb on that type of a deal of that size? Like, what exactly does it take to bring something that massive together?
It takes a group effort. It takes trust. You've got to trust who you're partnering with, that they're going to deliver on what they're saying they're going to do. You've got to deliver on what you're saying you're going to do, just getting it done.
So what would you say to the listeners out there? What would be like a key piece of advice you'd have for them?
Keep at it. Like I mentioned earlier, focus. If this is truly something you want to do and you want to invest in multifamily, and I'm guessing I'm speaking to operators or future syndicators, be persistent and build a lot of relationships. It's a little tougher now without being able to network, but I mean, you can still pick up the phone and call individuals. You can get on podcasts. You can do other things to get out there. You've got to be able to adjust with that. We've our meetup. We loved having our monthly meetup, and now we've changed it to a webinar. And you just got to be willing to do things like that. And then if you're starting out and you're not, I hear a lot of people that are starting out that they don't know really. Okay, if I find a deal, what do I do? Or how do I gain the confidence of a broker to think that I can really close on a deal? So my advice is to find another GP that's doing what you want to be doing and partner with them. Partner with them on at least one deal, maybe several, and that will get you your track record and get you where you need to be.
And what would be a good book recommendation you'd have for people? Something you've thought that was kind of instrumental in shaping you into who you are today?
As far as business books, I listen to a lot of books and I still read a few, but mostly listen. Traction, I think, is a great business book, especially if you're wanting to scale and build a team. And then You Can't Hurt Me is a great book for self-development, and those two really stand out.
And how could our listeners get in touch with you if they wanted to reach out to you?
They can, my website is elevatecig commercialinvestmentgroup.com. They can go on there. I've got a free ebook on there about investing in multifamily. If they want to send me an email so we talked about this before we got on, but my name is spelled Jorge and I go by Jorge or George. So my email is jorge@elevatecig.com. If you send me an email, I can send you a couple different checklists that I have. I've got a due diligence checklist, a list of questions to ask sponsors, and a couple other ones.
All right. Well, thank you so much, George. I almost made that.
Well, you can't lose, man. You can't lose either way.
So thanks for joining us. It was definitely a pleasure. I really appreciate that.
All right. Thank you for having me, man. It's been a pleasure.